What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I've done numerous videos on these guys as a monthly dividend business development company, Prospect Capital. I'll go over the pros and cons. A lot of you guys gave major requests to make this video, and I have done numerous ones. I have referred people to links, but since there was a popular demand, I'm going to make another video for you guys. So this is a very interesting monthly dividend stock. A lot of people like these guys for monthly dividend income. Like I said, I'll go over the pros and cons of them. So make sure you hit that notification bell after you subscribe. Let's check this stock out right now. Here's Prospect Capital. So I'm going to go in the past 5 years, and then I'll go since inception. This is a stock that has not done well against the S&P. It has not beaten the S&P. 2018, it was $7, and then 2020, it had a huge dip during the pandemic at $3.83. So many dividend investors capitalized on these guys as a monthly dividend business development company. Then it jumped up to $7.58. So there's a little bit of consistency right here at $7. Since inception, it's 2005, it started off at $15. And then at its peak, it was at $17, and it dropped down to $7.30. So right now, it has a dividend yield of 10.26%, a PE ratio of 12.95, the average volume 1.25 million, the market cap 2.79 billion US dollars. The range is 609 to 895. Its day range is 702 to 711, and its previous close was 709. Now let's look a little bit more into these guys. So we see a little bit of a dip from 1713 2006 to 702 right now. So these guys are a BDC, but we need to look more into them. So Prospect Capital is a leading publicly traded business development company. They make debt and equity investments in the U.S., middle market businesses across a range of industries, and seek to deliver steady, attractive returns to shareholders. So they have 400 plus investments funded, 3.8 billion dividends declared, and 7.7 billion in assets. Let's look a little bit more into them. So looking at their portfolio, they are well diversified. So here's their industries: aerospace, air freight and logistics, auto components, building products, capital markets, commercial services and supplies, communications, construction, engineering, consumer finance, distributors, diversified consumer services, diversified financial services, energy and transfer, diversified telecommunications, equity, real estate investment trust, food and staples, food products, health and equipment, health providers and services, health care technology, hotels, restaurants and leisure, household durables, household products, IT services, interactive media services, internet direct marketing, retail, leisure products, machinery, media, personal products, pharmaceuticals, personal services, software, textiles, apparel, and luxury goods, and trading companies and distributors. So out of all the business development companies, these guys are extremely well diversified. I'm just going all the way down. I mean, from A, actually, we'll start numbers from A, so A to W, they have a lot of, their portfolio is pretty strong. So they're well distributed throughout the United States. And they do a lot of middle market lending. So in their regions, they're pretty strong in the Midwest as well. So they're well, basically, they have a lot of regions. They actually have Puerto Rico. They have the Southwest, the Western, they're pretty dominant in, and the Northeast from what I've seen. So there are some popular things. And being in Puerto Rico as well, that's pretty cool. So Atlantis Healthcare Group. So now we need to look at their revenue. I will go over the pros and cons of these guys at the end. So there are some pros, there are some cons, but let's go over their revenue real quick. So here's the revenue in millions US dollars. Let's start in 2016, 791, 2017, 701, 2018, 657. 2019, 703, 2020, 623, and then 2021, 631. You can blame 2020 and 2021, pandemic, and a little bit of post-pandemic. Then 2022, it's 710. The one issue that I have with these guys is there's inconsistency. 2016 they were 791, and then 2022 they were 710. And then in 2019 and 2018 they were 657, and then 2019 they were 703. They're so well diversified, but the revenue is not very consistent, and that's what surprises me. So usually when there's not a lot of consistency or hikes, the rules for a business development company, and you can correct me if I'm wrong, and again, this is not financial advice for entertainment purposes, only disclaimer in the description, but you do not, okay, if companies do not, especially business development companies, they do not hike their dividend, it's because their revenue has been inconsistent. So as a shareholder, if there's an increase in revenue, which is attractive, there's usually dividend hike. That's why I like Hercules Capital. That's why I like CSWC. That's why I like Horizon HRZN, which is a monthly dividend business development company focusing on science and technology. So their revenue is just kind of stagnant. And I'll go over their dividend history. We'll start in 2014. They were 11 cents. 2015 in February, they were 11 cents. Then they dropped down to 8 cents in March 2015. They were stagnant at 8 cents until they dropped to 6 cents in October of 2017, and they never have hiked their dividend. They've remained consistent since 2017 based on looking at the trends. They have a payout ratio of 80%. Their dividend increases in 5 years is 0. They actually decrease their dividend. So if you bought one share, you made 72 cents with a 10.15% dividend yield. Now the pros are, a lot of you out there, and I wouldn't do this, and I would not invest in Prospect Capital, but if you have enough shares, you'll be able to buy more shares. Problem is, you're stuck at 6 cents. So I like dividend hikes. I like Main Street Capital a lot better, which is a monthly dividend business development company. And there's an inconsistency with revenue. Because the revenue is inconsistent, I have little or no confidence in any dividend hikes with these guys. Surprisingly, their portfolio is extremely diverse. One of the most diversified business development companies I've seen. Now, I used to own these guys. I got rid of them. I was just turned off by the way that they have not, accidentally kicked my keyboard. My foot fell asleep. But the thing is, like, they have no dividend hikes, and they're just stagnant. Now, you want to be at a job where you're stagnant and you get no raises, so be it. You want to be with someone in a relationship and it's just stagnant, not growing, so be it. You want to be, like I said, in a job field where you just are stuck there, like my field in exercise physiology, you're not going anywhere, so be it. But I like dividend hikes. I like raises. I like a little bit more consistency with dividend hikes. These guys are out. I will never buy Prospect unless they start hiking their dividends and they bring value to my dividend portfolio. I like dividend stocks or REITs, especially monthly dividend REITs that hike their dividend. So if I'm not seeing any dividend hikes, I don't waste my time with them. Now, Horizon's a little bit slower, but their dividend has been increasing over time. These guys have decreased their dividend. For some reason, they are not getting things right or getting things done. So as a dividend investor who likes dividend growth, who has a combination of income investing and dividend growth investing, I'm out. I actually like QYLD a little bit better than these guys because they at least do covered call options, and you're going to get a little bit of a hike 1 month, maybe go back down. But this one, I just don't have any confidence in Prospect Capital. I believe that QYLD is better. In the future, I will be buying a lot of covered call ETFs for monthly income. and to buy my quarterly dividend stocks. Right now, I just need to revamp my M1 Finance dividend portfolio, and then I'll start buying JEPI. And then I think M1 Finance maybe was going to approve DJIA, but I want those monthly dividend ETFs and covered call ETFs to really start kicking in, and I'm going to change a certain percentage, especially for my monthly dividend stocks, so I can start really turbocharging my quarterly dividend stocks. But these guys are not the answer for mine. So let me know what you think of this video. If you are new to my YouTube channel, make sure you subscribe and hit the notification bells and not miss future videos. I will have a video for you tomorrow. Happy Dividend Warrior Wednesday. Take care, and you guys have a good one.